the colleagues from DG FISMA to get on stage. They're already on stage. Ruxandra, Roxana, Boris, welcome. Thanks a lot for being with us. Please, the stage is yours. In whichever order you want to take the word and take the lead.
Okay. Good morning, everybody. It's a coincidence, but all of us are Romanian, actually, so we can just say Bună dimineața tuturor. We will continue in English, though, because we understand that some of the participants are not actually Romanian. But it feels good to be surrounded by our co-nationals. So good morning. Just a brief introduction to the digital financial strategy and the public consultation. Tudor already gave a very good background of what it means to be a fintech, what it means to be very active in the field of digitalization of financial services that continuously need upgrading. And here is where the FinTech Action Plan that the Commission published a few years ago comes into play. Right now, we are moving past that FinTech Action Plan because most of the actions that were envisaged in them have largely been achieved. Right now, we see that in the context of the COVID-19 outbreak and the consequences that it has on its citizens, businesses, and the economy at large, digitalization is playing an even greater role. But at the same time, it can accelerate the consequences of the pandemic. And our main focus right now is to deal with the health consequences of the crisis, but we also see room for a digital finance strategy to help with this. So building on the work carried out in the context of the FinTech Action Plan and the work carried out by the European supervisory authorities, together with an expert group report that was published in December last year, it was the RoFin.Tech group, the Regulatory Obstacles to Financial Innovation Expert Group. The Commission has identified 4 priority areas that could help the development of digital finance in the EU. And the public consultation that you can find a link to on the welcome page of this webinar is divided in 4 sections. I will quickly go through a few of them, and then my colleagues will take over. The first building block of this consultation and how we plan to build the continuation to the FinTech Action Plan would be to ensure that the EU financial services framework is fit for the digital age. Then secondly, we want to enable both fintechs, so both companies and consumers, to fully benefit from an EU-wide single market for digital financial services. So our focus is on the firms, but also on the end users of the services that these firms provide on the market, or the products that they bring to the market, so the consumers. The third building block is about data and how to promote a data-driven financial sector for the benefit of all EU consumers and firms. And the fourth building block that we are very, very actively working on right now is enhancing the digital operational resilience of the EU financial system. We are also focusing on crypto assets besides these 4 building blocks, but because the crypto assets already receive a legislative response, they are not specifically catered for in this public consultation. So the first section of the public consultation seeks your views based on your experience and the needs that you have identified on how to ensure that the financial services regulation is technology neutral and innovation friendly. The idea is that we need to address risks in a proportionate way, and same activity, same risk, this type of principles should be embedded in legislation. The second section invites you to share your views on ways to remove fragmentation of the single market for digital financial services. Here we are again building on the work carried out in the context of the 2018 FinTech Action Plan, where the Commission has already identified a number of obstacles to the single market. So right now we need further input on how best to address those that have been already identified, and maybe new ones that you can mention to us. We also included a number of questions that regarding other potential issues that may limit the deepening of the digital single market, and how you consider that they should be tackled at the EU level. I will leave the third section to my colleague Ruxandra, and the fourth section to my colleague Boris. Just really quickly on the single market section, because all the sections are obviously important, but this one is very close to my heart as an EU legal officer, and truly believing in the single market for all types of services. Yes, we should also have a single market for digital financial services by removing all the obstacles that do not allow nowadays for firms to scale up. So they diminish the economic productivity and competitiveness of EU fintechs nowadays. And here we are looking at examples of such as lack of consistency in the transposition of specific EU directives, in their interpretation and application of EU regulations, in divergences in the regulatory and supervisory attitudes or expectations towards digital innovation, in the licensing procedures, whether they have been gold-plated at national level, in issues of funding, but also how to help leaders and business leaders and investors scale up across the EU. We see a big interest nowadays, even more, in facilitating the use of digital financial identities, given that customers are onboarded nowadays most of the times remotely, so without physical presence, and that can cause concerns regarding anti-money laundering and terrorist financing. So there are stricter rules in the AML regulation dealing with this, and the EU has a very innovative system based on the EIDAS regulation of national digital IDs that can be recognized cross-border. However, because of AML concerns, it seems that the market cannot fully develop to the point of reaching completely cross-border interoperable digital IDs. Another area that we want to look deeper into is making sure that firms can carry out technology pilots and can scale up across the single market, because we see that the supervisory response up to this day has been rather limited. Only 3 national competent authorities till today have established regulatory sandboxes. 5 more are under development. And these regulatory sandboxes enable firms to test after they have established a specific testing plan that has been agreed with the competent authority. They test innovative financial products, services, and even business models without having to comply initially with all the requirements that any firm that sets up business in the EU should, obviously within the boundaries of legislation. But wherever there is some flexibility in these regulatory sandboxes, national competent authorities can apply such flexibility or proportionality in order to test new products. Here we want to build up on the work that has already been carried out within the European Forum of Innovation Facilitators, that is intended to promote greater coordination and cooperation between facilitators of innovation that are established by the financial sector supervisors. Then when we move along the public consultation, the last section on the single market is meant to gather ideas on how to empower and protect EU consumers and investors using digital finance across the single market. And this is mostly about digital financial literacy and how to avoid financial exclusion of specific groups of the population that are seen as more vulnerable. I would like to hand over to my colleague Ruxandra to give you a quick walk through the open data part of the consultation.
Mulțumesc, Roxana. Bună dimineața tuturor. So the issue related to the data sharing and the data usage, it's not specific to finance, but it acquires a very important dimension in the financial sector because finance is particularly data-driven. And actually, it has been a promoter of the data usage and reusage. And also, when we look at the different progress that we see in the uptake of AI, we understand how important data becomes for the financial sector. So basically, in a nutshell, it is important to maybe from the beginning say that this policy that we try to put in place in the financial sector in relation to the development of a data-driven digital finance, it's actually part of a bigger strategy and of a bigger vision at the EU level that looks across a different economic sector. We really want to empower Europe to take full benefit of all the advantages that the data now brings to consumers, to firms, and to the overall society. And this is why this particular strategy in the financial sector, it is very linked and builds upon a broader vision that was also set up earlier in this year, in February, with a communication that tries to put in place this new approach to having a framework for the data in Europe. Of course, data, when we talk about data, we mean the different types of data: personal data, industrial data, machine-generated data, non-personal data. So there are different layers and different types of data. But what is important is that the Commission overall tries now to make more operational this vision and to put in place an enabling legislative framework for the governance of the so-called common European data spaces. And this is something that we are working together with other colleagues in the Commission in a different DG, in DG Connect. But the idea is to develop different governance structure that would allow and support decisions on what data can be used and how can they be used and the type of standards that are needed across the sectors, but also take into account the need to cater for specificities in each of these sectors. So we are talking about an exercise of trying to basically aggregate and pool this data, which is still in the making. But I wanted to explain this a bit to understand that this exercise that takes place in finance is not an isolated one. And the same discussion that we have for enabling a better data sharing is also taking place in different sectors of the economy. In the automotive sector, where already there has been an exercise of trying to achieve a balance to have a fair data usage, but also in the healthcare sector, in the industrial sector. So basically, data is now pervasive. It is actually the blood life of the economy. And this is why also in the context of this particular strategy that is focusing on the financial aspects, we looked at ways and we put questions about the mechanism, the strategies, the different manners in which we could have more data sharing in finance. Of course, one starting point is already the PSD2 directive that's already achieved an important, let's say, goal, because it's opened the EU payment market to competition. And in that respect, it already states, let's say, or set a stage for the future. But of course, that is only one step, and it enabled today the TPP, the third-party provider, based on the consent of the user, to have access to data. That data is still limited to payments account data. So the question is, first, how to go further, how to go beyond, because we want data to be actually shared, to be used and reused, and to build upon this data to create new services and to enhance competition. So this is why this particular part of the strategy put some questions around the main themes in how to set this data-driven economy in finance. So one particular question is how to do this, how to make this data usable across the sectors, the infra-sector in finance, but also across the different sectors. We need machine-readable formats, but we can also use different gateways at national or EU level, or federating existing public database to have a single access point at EU level. The question of API also came into discussion, because we know that the application programming interface is very important to use this and to access databases. And already, again, PSD has been a good exercise, but we are still learning, and both banks and TPPs are learning from this exercise. Another important issue is the fact that whatever we do has to be fully compliant with the high level of protection of the personal data. So what we have at EU level already is a very good framework. GDPR already enables the sharing of data, and everything has to be based on the consumer consent. So if we want more data to be shared and to be reused, of course, we have to make sure that all these mechanisms empower and allow the consumer, the user, to be always in, let's say, in charge of its own data and to decide accordingly. Of course, that is a principle, and sometimes in the concrete application, there are different hiccups. And when we talk about sharing or using of real-time data, we know that there are many difficulties, and this is why we will look already at the portability issues and the different types of articulation in the context of GDPR that we might find useful to get these rights really enhanced and make this right actually actionable in the case of real-time data. So another question is, again, what type of data do we need to share? And we are very much welcoming your ideas and your inputs. We can talk about data from the savings account, but also data from different retail investment products or life, non-life insurance. So the idea is to expand a little bit the scope of that data. And of course, most importantly, we would surely we will need to look across the financial sectors, because there are many data that lie in the different economic sectors, and we want this data that is generated and also co-generated by other services like retail or energy or transport or social media or e-commerce to be fully integrated. So that would be basically a snapshot on how we want to go further with the data-driven economy. And because we talk about data, I hand over to Boris, because the cybersecurity and digital operational resilience aspects are very important when we talk about data. Data needs to be used, needs to be shared, needs to be accessed, but most of all, data needs to be safe and secure. So Boris, please.
Mulțumesc, Ruxandra. Mulțumesc, Roxy. Bună dimineața tuturor. Indeed, it's a nice coincidence that the three of us are Romanians, and we all work in the same unit on digital finance at DigiFISMA. We work on different files, but also on the digital operational resilience file. So I would probably go through and explain basically from where we come and where we go. As Roxana mentioned, the current consultation does not include questions on the digital operational resilience, as this was covered by a dedicated public consultation that we launched late last year. So basically, we started with this work some time ago, but in 2018, in the FinTech Action Plan, we basically invited the European supervisory authorities to assess the needs for legislative changes in the current financial services legislation acquis on, if you want, on ICT risk and governance or on cybersecurity. And they responded to the Commission by publishing 2 joint technical advices last year in April. And in these advices, they have highlighted that the current rules are fragmented in terms of scope, granularity, and specificity. And they have recommended to the Commission to put forward some legislative changes in different areas. So building on that advice, we launched some internal work streams at DigiFISMA, also in collaboration with our colleagues in other DGs, to further assess the different issues that the ESAs have highlighted in their technical advice. We are also, and I think it's important also to mention that we are also actively participating in international work on cybersecurity and operational resilience for the financial sector. So we also incorporated and looked and wanted to integrate that work in this file. And the result of our internal reflections, a result of the assessing the ESA's advice and the international work, we published last year in December a public consultation and a roadmap on a potential Digital Operational Resilience Act in financial services. That public consultation and the current work, if you want, is structured around four main building blocks. One of them is ICT risk management. So basically, on this building block, the idea would be to enhance the current rules, to strengthen those current rules, which in some areas are more general, in others are practically inexistent. The second building block refers to information sharing and incident reporting, so what we call ex ante and ex post. Ex ante is the exchange of threat intelligence on cyber threats, and the ex post is basically reporting of incidents and disruptions, ICT-related incidents and disruptions to supervisory authorities. So on this building block, the idea is to basically streamline the existing rules and also expand these rules to those sectors that are not currently covered by the legislation. The third building block refers to cyber resilience, and here we do think that financial sector entities should be able to assess their, or well, not should be able, but should also do it. Should assess their, their protective and responsive capabilities if you want to cater for ICT risk. And the last building block refers to third-party risk. Here we approach this building block or this issue from two sides, from two angles. One is the indirect, if you want, supervision of these third-party providers, ICT third-party providers, through the different outsourcing rules and provisions that exist in the financial sector. And the second angle is potentially establishing a direct oversight framework for these ICT third-party providers. So these were the topics on which we consulted in our public consultation. I also briefly highlighted a bit what is the main idea or the direction in which we want to go, or we intend to go. Of course, we are still in the process of shaping the policy on these topics. The public consultation ended in March this year. In March, a couple of months ago, we received around 100 replies. There was overall a broad support for these topics. And we are now basically in the stage of preparing this potential legislative initiative. And the idea, according to the Commission work program, the updated Commission work program that was published a couple of days ago, we aim to present this potential initiative in Q3. So, the end of Q3 around. So that's basically it in general terms. We are working very, very hard and other to well, this initiative, and as Ruxandra said, securing the environment in which financial institutions operate, it is